Welcome to the video on the hidden tax trap of dual employment and why your W-4 can mislead you when you have multiple jobs. In the next several minutes, we will break down why underwithholding happens, how to fix it, and 3 practical strategies you can use today to avoid a surprise tax bill. Let's get started. Here is the agenda. First, we will explain why underwithholding happens when you have 2 jobs. Next, we will cover 3 actionable strategies to fix your W-4 quickly. Then, we will walk through the IRS Tax Withholding Estimator step by step. After that, we will address privacy concerns and employer policies. We will also compare strategies and share quick examples. Finally, we will test your knowledge with short quizzes. Before we proceed, a quick disclaimer. This content is educational and not tax, legal, or financial advice. The information applies to the United States and focuses on the IRS W-4 form. Your situation may vary. Please consult a qualified tax professional for personalized advice. Let's begin with the core problem. Each employer calculates withholding as if their paycheck is your only income. When you have 2 jobs, your combined income lands you in a higher marginal tax bracket, but neither employer withholds at that higher rate. As a result, total taxes withheld during the year can be too low. This can create a substantial balance due at tax time, including potential penalties if the underpayment is large. The visual pie illustrates that the combined withholding from both jobs may fall short of the true tax owed on the combined income. This flowchart guides you to a strategy. First, if you have more than one job, decide whether you want a simple approach and are comfortable with slight over-withholding. If so, choose Strategy 1, checking the multiple jobs box on both W-4s. If you prefer a guaranteed refund and want to avoid any risk of owing, pick Strategy 2, filing as single with 0 credits on both forms. If you want accuracy tailored to your income mix, use Strategy 3, the IRS Withholding Estimator, which instructs you to add a specific dollar amount in Step 4, C. Finally, the diagram includes a feedback loop. After your next paycheck, review your stub, recheck the estimator, and adjust again if necessary until your year-end projection balances. Now, moving on to Strategy 1. On each job's W-4, check the Multiple Jobs box in Step 2, C. Doing this on both forms tells payroll to use higher withholding tables suitable for multiple jobs. The main advantages are simplicity and speed. For many people, this alone resolves underwithholding. However, if your 2 incomes are very different, this approach may still be slightly off. As a best practice, revisit your withholding after any raise, bonus, or change in hours. Next, Strategy 2 is the conservative approach. On both W-4 forms, select single filing status and claim 0 credits or dependents. This typically results in over-withholding, which means you are more likely to receive a refund at tax time rather than owe. This is suitable for those who strongly want to avoid any chance of a balance due or potential underpayment penalties. The trade-off is reduced take-home pay throughout the year. Now, Strategy 3 is the most precise. Use the IRS Tax Withholding Estimator online and enter all jobs, pay frequencies, expected bonuses, and applicable credits. The estimator will calculate how much additional tax should be withheld to keep you on target. Then, enter that additional dollar amount in Step 4C on one or both W-4 forms as instructed. This approach provides accuracy tailored to your situation but requires careful data entry and a few minutes of your time. Let's walk through the IRS Withholding Estimator. First, open the estimator on the official IRS website. Second, gather your latest pay stubs for all jobs and your most recent tax return. Third, enter your filing status, dependents, eligible credits, and any other income. Fourth, add each job's details, including pay frequency, year-to-date figures, and expected bonuses. Fifth, review the estimator's recommendation for extra withholding per paycheck. Sixth, update Step 4C of your W-4 with that specific amount for one or both jobs as directed. Finally, after your next paycheck, compare actual withholding against the estimator projection and adjust if needed. This table maps the W-4 entries across both jobs. Step 1 is your personal information for each job. In Step 2C, you check the multiple jobs box on both forms for Strategy 1. Step 3 is for credits. In Strategy 2, you keep this at 0. Step 4A and 4B are for other income and deductions, if applicable. Step 4C is where you add the exact extra withholding from the estimator for strategy 3. Finally, sign and submit a W-4 to each employer. This sequence diagram shows the flow. The employee completes W-4 forms for both employer A and employer B. Each employer calculates withholding independently based on its own payroll. Throughout the year, both send withheld amounts to the IRS. At tax time, total income and withheld amounts are reconciled on the return, determining whether the taxpayer owes or receives a refund. The diagram notes that using Step 2C or Step 4C helps align withholding with true combined income, improving accuracy and preventing surprises. Now, about privacy. Your W-4 information is confidential and retained within each employer's payroll system. Changing your W-4 at one employer does not notify your other employer. However, you should review your company's outside employment policy, avoid conflicts of interest, and follow any disclosure requirements. In many cases, outside work in different industries or outside of work hours is acceptable, but it is your responsibility to verify and comply. Let's compare. On the left, Strategy 1 is the simple toggle. It's quick to implement and works well for many people, but it can be less precise when job incomes differ significantly. On the right, Strategy 3 is precision tuning. It is more accurate and adapts well if your incomes vary or change often, but it requires a few minutes to configure. Strategy 2, the conservative option, is a choice for those who want to ensure a refund and avoid owing, with the trade-off of reduced cash flow during the year. Consider a quick example. Suppose Job A pays $50,000 and Job B pays $35,000 for a total of $85,000. Each employer withholds as if you only make the amount they pay, which means combined withholding aligns with the lower brackets, not with the higher bracket that applies to your combined income. Checking Step 2C on both forms increases withholding to better match the combined income. Using the estimator could instruct you to add a specific amount, for example, $65 per paycheck in Step 4C, so you are on target. Always recheck after raises, bonuses, or adding a new side gig. Quiz time. Question: if you have 2 jobs and do nothing to your W-4s, what is the most likely tax outcome next spring? Options. A. You will automatically get a refund because 2 jobs means more withholding. B. You will likely be under-withheld because each employer assumes their pay is your only income. C. It will not matter. The IRS adjusts it for you automatically. D. Your primary employer will be notified and adjust both W-4s. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is B. Each employer assumes their paycheck is your only income, so combined withholding is often too low relative to your total income. This leads to underwithholding and a potential balance due. Second quiz. Question: which W-4 action gives you the most precise withholding when you have multiple jobs? Options. A. Checking the multiple jobs box only on your primary job. B. Filing single with 0 credits on one W-4 only. C. Using the IRS Tax Withholding Estimator and adding the recommended amount to Step 4. C. D. Waiting until tax season to settle up. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is C. The IRS Tax Withholding Estimator provides tailored recommendations based on your combined income, pay frequency, and credits. Entering that amount in Step 4C yields the most precise withholding. Here are the key takeaways. First, 2 jobs often cause underwithholding because each employer only sees their portion of your income. Second, fix it quickly using Step 2C. Or choose the conservative single and 0 credits approach. Or use the IRS estimator for precision. Third, Step 4C is where you add exact extra withholding when the estimator recommends it. Fourth, your W-4 is confidential, but you should still follow your employer's outside work policy. Finally, recheck your withholding after compensation changes or added gigs. To wrap up, choose a strategy today. Step 2C on both W-4s, the conservative single and 0 credits, or the estimator guided Step 4C. Submit updated W-4s to both employers and verify the results on your next pay stub. Schedule a mid-year check-in and review after any changes in pay or employment. If your situation is complex, consider consulting a tax professional. Thanks for watching. If this video helped you avoid a tax trap, please like, share, and subscribe for more practical money guidance. Tell us in the comments what strategy you chose and how it worked for you. See you in the next one.